What's going on, great people? Hey, somebody's got to be great today. It might as well be you. Welcome once again to Investing and Trading Made Simple. I am your host, Cedric Threet, aka Simple Cedric, and that's what I'm here to do, make investing and trading simple. Today we're going to be getting technical. Remember Olivia Newton-John had that song years ago, Let's Get Physical? Well, we're going to get technical. Let's get technical, technical. Let me hear your money talk. That's what we're going to be doing. We are going to be getting technical by showing you some of the technical analysis that I've been talking about. Now, this video is specifically for traders. It's not for investors. Remember, I told you that investors use fundamental analysis. We are talking to the traders today. That's who we're talking to, the traders, because traders use technical analysis. So I'm going to show you how to use this technical analysis by using something called indicators. And before I do that now, as always, I need you to go ahead and hit that like button, the share button, the notification button, the subscribe button. Do all of that stuff, and we will be ready to go. So let's go ahead and start getting technical. Here's my disclaimer. You've been with me long enough. You know what it says. This is for educational purposes only. I'm not trying to sell you anything. And investing and trading involves risk. So let's talk about these indicators. Indicators are kind of like the speedometer that I'm showing you on the screen here. You know, the speedometer in your vehicle, it doesn't control how fast your vehicle is going. It only tells you how fast your vehicle is going. That's kind of what indicators do when it comes to your technical analysis. They don't control how high or how low the stock is going. They only tell you how high and how low it's going. The same with this little weather forecast chart you see down here. The weather forecast chart, the weatherman, he basically tells you what he thinks is going to happen tomorrow or the next day, or he's even telling you what happened today. That's what indicators do. They tell you what that stock did today or what it's doing now, and they kind of give you an indication of what's going to happen in the very near future. Now here you see a screen. It doesn't have any indicators on it. This is just a plain chart. This is a chart of Apple. I took a snapshot of this chart. Don't worry about the little letters that you see on the chart. The D, that just stands for the day they were announcing their earnings, which we're not going to get into that right now. But here's a chart, and it doesn't have any indicators on it. It's just a plain chart. This is what your chart will look like without any indicators. Now, the first indicator I'm going to be talking to you about is called a moving average. A moving average. And what it does is it takes the average of a particular amount of days. You see this line here? This is called a moving average. And it takes the closing price of a particular amount of days, be it 10, 20, 50, some people use 100-day, even a 200-day moving average. This shows you the closing price of, say, the last 200 days for this particular stock. And this is called an overlaying indicator because it's overlaying your chart. Here's another overlay that you can use with your technical analysis. It's called a Bollinger Band. And I believe it's called a band. It's called a band. Well, it's called Bollinger because the guy who invented it, I think his last name is Bollinger. But it's called a band because it's just like a rubber band. It stretches and it comes back together and stretches and comes back together again. Here you have a lower band and you also have an upper band. And what happens is what it does, when it touches this upper band, when the candlesticks touch this upper band or go through it, then they will tend to start coming down. That's an indication for people to sell. And then when it touches the lower band, it'll start to go back up. And that's an indication for people to start buying. Now, all of these indicators that I'm going to be showing you are basically they're called lagging indicators because they are lagging behind what's actually happening on the chart, but they're not lagging too far behind. The candlesticks will be a little ahead, but they won't be too far ahead. Here's another one. This one is called the MACD. MACD stands for Moving Average Convergence and Divergence. What this one does is it's a momentum indicator. It's a momentum indicator or an oscillator because it tracks momentum of the stock. It's tracking the momentum of it. It's showing you what it's doing. See here these lines that are crossing? When this blue line crosses the red line and starts to come down, you look at the chart, it's doing the same thing. You also have these lines here. There's a center line. There's a line going down the center. My drawing's not too good here, but there's a line going down the center. And when these little lines go above it, that means the stock was going up. When they come below it, that means that stock was going down. But also, if you look at this line here, when it crosses, look at the chart, it's doing the same thing. Here, they're crossing again, and that chart is doing the same thing. So this is another advantage you can use when it comes to your technical analysis. Now here's one called your stochastic. You have a slow stochastic and you also have a fast that's kind of hard to say. A slow stochastic and a fast stochastic. Now I'm not going to go into why one is called a slow stochastic and the other one is called a fast stochastic. But what this does is also a momentum indicator or an oscillator, and some people call it a lower indicator. Your moving average and your Bollinger Band, some people call those upper indicators because they're on the upper part of your chart. And these others that I'm showing you are called lower indicators because they're on the lower part, or they're oscillators or momentum indicators. But anyway, the stochastic, what it does is you see here it has a bottom line there, a little dotted line, and it also has a top line here. This bottom line will be labeled with a 20, and the top line will be labeled with an 80. And what this does is, you see here, when these lines start to move above that 20, you look at the chart and your candlesticks are basically doing the same thing. That's an indication for people to buy. That's called a buy signal. And then you look here when the line starts to move below the 80, you look at the chart, it's doing the same thing. That's called a sell signal. That's an indication for people to start selling. See over here, it's doing the same thing. Look at the chart. See right there, coming below that 80. Look at that chart. So that's what a stochastic does. And finally, here's your relative strength index, or RSI. It's another what's called lower indicator or oscillator or momentum indicator. It does kind of the same thing as your stochastic. You have a bottom line here and you also have a top line. But one of the major differences between this RSI and your stochastic, whereas your stochastic was labeled with a 20 at the bottom, your RSI will have a 30. And the stochastic had an 80 at the top, your RSI will have a 70. But it does essentially the same thing. You see this line here, when it starts to move above that 30, look at what your chart does. And right here, when it gets close to, touches, or starts to move below that 70, look at your chart. See what it does? That's a sell signal. That's a sell signal. So that's how people use this indicator during technical analysis. Here you have all of them together. You've got your moving average, you've got your Bollinger Band, you've got your MACD, your RSI, and your stochastic. All of them are right here on this chart together. And this is just a few. This is just a few of them. This is just a few of the many indicators that you can use to help you with your technical analysis. Now, me personally, I really don't use any of them. I trade naked. Now, don't be alarmed. That doesn't mean that I trade with my clothes off. That just means that I do my trading. When I do my trading, I don't use any of these indicators. I let the chart tell me what I need to do. But if you need to use these indicators, they are there to help you with your technical analysis. They are really, really great. So use them to your advantage. So after you've done all that, now you've got what I call your GPS. You know, I told you earlier that these indicators are kind of like a speedometer, but you can also use them as a GPS when it comes to using your technical analysis. Your GPS stands for goal, plan, and strategy. You've got to have a goal, you've got to have a plan, and you've got to have a strategy. Now, your goal may be, I'd like to make X amount of dollars each week. And your plan can be, how am I going to do that? I'll do that by buying at least 3 stocks. And what's your strategy? I am going to use my charts and my indicators. So there you have it, people. I told you it's not complicated. Hey, Shaft is the only complicated man I know. He's a complicated man, but no one understands him but his woman, John Shaft. I'm dating myself. But hey, I told you, we're going to keep this thing simple. Look at all the stuff you've learned in this video. In less than 15 minutes, you've learned how to do technical analysis by using indicators like the MACD, the moving average, the slow stochastic, the RSI, the Bollinger Band. And if you don't know it by now, hey, go back and watch the video again. Only 15 minutes or less. You've learned all of this stuff. I told you we're going to keep learning. We're going to keep growing. And we are going to keep it simple. Hey, thanks for all the love and support. Thanks for visiting the video again. I hope you come back for the next one. Go ahead and remember to hit that like button, the subscribe button, the share, the notification. Let people know about it. Hey, I really appreciate all the comments I've been getting. I really, really do. It keeps me motivated. It keeps me going. And it lets me know that you are learning and getting some value out of these videos. So until the next time, thanks once again. And hey, keep being great. And I'll see you in the next video.